All right, guys, welcome back to another chart talk. We're gonna jump right into it. Again, the big thing that happened the end of last week was a big pivot in Mr. Powell's stance on interest rates and rate cuts. Again, in the past, he's been a bit hawkish. Again, for those that don't know, finance people love to use, complicated jargon. When it comes to hawkish, again, the goal is to have a grip on interest rates, bring inflation down. You think of a hawk, you think of very strong, very aggressive, and they do this to help slow the economy down. But if you do it too much, you can risk slower growth and risk a potential recession. And this is typically the stance that Jerome Powell has had for the better part of the year. And very recently, he switched to a bit of a more dovish tone, where the goal is to support economic and job growth. You think of a dove, you think of accommodating and supportive and gentle in a sense. And this is done by lowering interest rates, which makes borrowing cheaper. And these things encourage spending, investing, and hiring. And it seemed like Powell was sticking on the labor markets, trying to lower the unemployment rate, was his reasoning for making this switch. When in reality, the optics of it really seems to be just the political pressure that he's been getting and kind of having the pitchfork pointed at him when everyone's saying lower interest rates, and he's kind of being the bad guy who has not been doing so, which in his defense, definitely on his side thus far, because again, the markets are at all-time highs or near all-time highs. We have a market here where everyone's screaming for lower rates when these things that were done, you think about it, back during COVID, we had massive rate cuts, back-to-back rate cuts down here. There was rate cuts since then, but the most notable ones were these cuts during, the crash during COVID. And these are the times where it does make sense to lower rates because, again, you have an extremely weak and market that's breaking down. But now you have a market that's done nothing but climb higher year over year since. And again, in his defense, it's, we're at all-time highs and we don't really need these rate cuts. But he has made that pivot. Again, when he does make these changes, you can see in his tonality and the wordings like open-minded. He's open to, changing data and willing to lower these rates. We'll see if that happens. Maybe it just talk to kind of calm everybody down. And it came at a very pivotal point at the end of the week when the markets were pulling into major support within this channel. And again, if maybe his tone was a little more negative, it could have, had the market breaking down, aging over lower, and he'd have to, have a bigger problem to unravel versus just kind of giving the people what they want to hear to keep the market within this channel. So we'll shift over to some of the broad markets for a moment. Again, Qs have been leading this market higher, a very clear breakout stage. We have not even looked back or retested the prior all-time high break. So very strong market. Again, very key level of support that held on Friday. Very strong action. The market definitely loved the news that we heard from Mr. Powell. And the Qs are, again, still chopping in this range. For now, it's looking to buy through Friday's high for it to continue to grind up near the resistance level. Second place in the broad indexes has been the S&P. And we've seen this tighter consolidation that's been forming. Again, going into Friday before his announcement, the expectations on my end was a breakdown of 630, but we had some market moving news to the upside that kept us in this tight channel. But as these flags get smaller and smaller, the breakouts get weaker and weaker. So we have right now a 1.5% flag in the S&P. And even if we do break this call it 650 area, 648 area, the breakout measure move is a percent higher. So we're talking about an extremely tight consolidation, and you have, a measured move to, 660. But when you have these bigger flags, we draw one out here. Here we have like a little bit of a bigger flag here, 20-point range. You get a little bit bigger breakout. But when you get these tighter, 8, 10-point moves, you have to expect those same moves higher. So, we probably do get a push higher at some point. We probably will see new all-time highs, but these tiny consolidation periods eventually can't continue to get tighter and tighter. They do with each subsequent bull flag that we see on the way up, but eventually that pattern has to break and a new pattern has to emerge. So still proceeding with a little bit of caution up here, just because the consolidation periods are getting so small. So let's move on to a few key sectors. Materials has definitely been the big clue or leading sector in this market related to price action. So again, materials very clearly in that breakout stage. This was the first sector back at the end of July to break, the breakout stage that it was in. It's the first one to break, the first one to go into what we can see within these orange lines as like a new topping or consolidation phase. So that was, proceed with caution when we saw this. We saw it hold up. We saw it couldn't break this prior pivot, which was amazing. And then we had that very tight flag here up back at highs. And again, on Friday, we had that break higher. Again, super tight consolidation. We got a $3 range here, and we get a $3 breakout higher. We don't get the follow through today. Again, it seems like kind of the sugar high of Friday's news kind of mellowed out over the weekend. But this is some good news. Again, materials were the first one to break down out of that breakout stage. They were the first ones to consolidate and are now, again, the first ones to break out higher. So overall, very good news to see from the materials. Now, we were speaking about this last week with tech, where again, they were kind of following what materials were doing. Materials were the first to break down. We're now seeing tech, which was the leading sector, break down at that key support level and now start to trade in a consolidating or topping pattern. Again, for now, with the price action we've seen since Friday, it does seem like a push through that 705, 710 area. It's probably more likely in the cards than a big breakdown down through 660. But for now, it's just consolidating. Again, for energy, we had a nice alert in it last week through support, very tight risk up through this 120 versus 118, about 1.5% risk. Got great follow through into the short-term resistance area that it's been forming. Again, this was kind of the first alert to take some profits. And if it can continue to push up through here, we probably get a move to fill this gap at this like 128 area. The other key sector we want to talk about is this consumer staples. Again, we had that alert last week on that break, but it did fail. Not ready just yet. We do want to keep a closer eye. Again, this like 224 area has been setting up for the better part of this entire year. So if and when it does go, we definitely want to be involved for that move. Again, this probably, sends this name to 250 in time. So for now, just not ready just yet. We're just focused on the next attempt at the level. Moving on to a few names I have a close eye on or recently just got into. First one is this RRR. If we zoom out a bit, we can see this level has been setting up since the beginning of the year. It's finally, this is about the fourth attempt at the breakout level, which was today. We did get in. We had an alert to fire it off this morning to remind us of this trade. And for now, just a stop first to low a day versus that 60.89. So again, for now in the short term, aiming for a move to 65 in the short term, just based on the measurement of this recent flag. But again, there's much broader. If you look at the weekly, this broader flag should probably send this name, closer to 90 or 100, in months' time. But in the short term, just looking at the shorter consolidation for this RRR. Next up, we have this KNSA. Let me go over to a daily chart here. This is a name near, tick new all-time highs last week. A very strong biotech name. We had this very tight earnings flag that was forming, and we're just keeping a close eye on that 34 breakout. Again, we had that doji day at high on Friday, inside day and down. So, it isn't a void in the short term, but again, we're only focused on when it's able to get back up to 34 and push through there. So we want to pull back in, even as low as 32 or even lower, means nothing to us. We just care when it gets back up to 34. Next up, we have this CRE. Zoom a bit here. So we had this alert from on Wednesday through this 160. That 158.45 stop is still holding today. And we had a little tight inside day, that nice strong close pushing it above Friday's high a day. And based on this measured move of this bull flag, we have targets to take some profits at this 166, 167 area in the short term. And if we continue higher, continue to hold it for longer, but very nice textbook breakout. Next up, we'll move over to a couple top member ideas. First up, we had Becker's idea in this Google pushing through the 2-week highs today. Again, looks very strong. You can see down here back in July, I had a break-even trade in it. Just, had a break-even trade, missed it, did not get back in, but Google's been, continues very strong. Great to see. Out of that meme, it does seem like for now, a stop versus 196, 195 area seems to be a short-term pivot. Next, we have Adrian's idea in this Visa. Again, we can see this channel forming. Want to see a break of this, downtrend again. We want to see a little bit more of some horizontal resistance. Again, for myself, I'll be a little bit more focused on this 360 area, just because it's a little bit easier from a chart reading standpoint to see that level. We can see couldn't break again. So very clear resistance here. Again, there's nothing wrong with this pattern, but it's not going to be as focused on from a trading standpoint of this downtrend break than that horizontal break of that 360. So I would personally just keep a closer eye here. Again, definitely can see the pattern that he's seeing here. Again, you get a break up through 352, keep it tight stop versus 345. Definitely can see that, and then maybe potentially add through that 360. Moving on, we have Tesla's idea in this PAY. This is an IPO high setup and one of our favorite setups when it comes to recent IPOs. Again, this name has been out for a couple of years now, but what we care about is when a name can take out its IPO high. So we can even see with, the recent IPO is FIG, which was the talk of the town beginning of August, but since then has taken out that IPO low. And for now, it's a massive avoid. You don't want to touch these names. I will personally not touch this name until there's a break through this high, which will most likely be in 3 to 4 years. Just like we're seeing with this pay, it's been setting up. It's taken, nearly half a decade, 4 or 5 years to get back towards that IPO high area. And we've seen this with a lot of names. You have that initial IPO, it gets some initial love, but then falls over everyone's radar. People move on from the name, and you need to wait for the base. You need to wait for that breakout to retest. And even now, it still probably needs some more time after this very fast move back to this 40 area. But if we can get a tight consolidation under 40, even versus this 36, no reason why if and when this name ever breaks 40, you see it at 60, 70, 80 a year later, once there's a break and close above that 40 area. So amazing setup, just will probably take a little bit more time. It's not going to, I would not expect this to go tomorrow or the next day, but if and when it does, we'll have the alert set and we'll make sure that we catch it. Next up, we have this DRI, which is one of Abby's top ideas. Again, like that Visa, very clear level of resistance. We can see that break and push higher. And now we can see that resistance area is continually acting as resistance as of late. So probably needs to pull into this 200, base out a bit. And then if and when it gets back to 210, looks very good for a move, at least back to that 230 area. Another one of Abby's ideas is this SPGI. Another little earnings flag here. Got a few tight inside days the last week or so. Again, focus on that move above 560. Short term, you probably got to move to 580, where the risk is about 10 points. Again, $560 name, risking $10 in the name, 1 to 2% risk. Very low risk reward in that setup. Another one of Abby's top ideas is this 250. Is this 250? We can see the earnings gap up. We can see the pulling that's happened since. And we can see the very clear resistance level setting up under this 250. So you got about $10 of risk in the short term versus 240, but you got a lot of room for this name to break out of this base, mini base, and climb back up towards retesting this 290 in time. Next, we have another one of Abby's ideas, this CDNS. Again, another very expensive name, which are our favorites to trade, where we can find very tight risk entries. Again, like Adrian's Visa, we can see that little channel that's been putting in, but we can also see the horizontal resistance here at this, 356, 358 area. So that would be my key focus for that entry is the break of this. We'll just call it, 358 for now. So looks very good. Again, needs to, like it did here, we need to see that break. We need to see that break on volume. And you probably see a bigger move as the same pattern is repeating over and over again. So another one looks very good. Another one Abby's looking at is this Hershey, HSY. Again, you can definitely see this support to resistance flip. We can see all of 2024. Hershey was supporting 180 until it broke. You can see the break below. And then we have that support to resistance flip. So we can see since then, it's been now trying to battle and get above this 180. Now, the only thing about this that I'm not too fond of is it just looks like it wants to H over. We have this initial kind of move down. We have it trying to battle with this 180 resistance, and it's getting very tight. And yes, it can definitely push to this 180 area, 182. You have tight risk versus this little pivot, but we have that what looks to be an H pattern. So in the short term, again, this one might be a little bit of a pass until we get a little bit more of a flush, and maybe the next attempt through it, you get that sustained move through this 182 area. That's just the one I might proceed with a little bit of caution. And then lastly, we have this MDT, which was another one of Tesla's ideas. Again, like that PAY, multiple year setup. So this MDT has been showing us very clear resistance since 2022. Just give me a moment. And it has not been able to get above or close above this 95 area since 2022. It kind of flirts with it, closes below, pushes up, closes below, has not had a close above this 95 in multiple years, almost 4 years now. So once it can break and close above this 95, definitely there's plenty of room to run in this name. You have all-time high retest 136. You probably get a short-term move in a month or two after that break to this like 110 area. But we just need that break and close above 95. Again, we're seeing some volume coming in here. I know if you're watching this, it might be a little hard to see these volume bars down here, but we are seeing volume coming in, some higher than average volume, which is good to see. Maybe you need some time again. With these patterns that have been developing for years, you need to realize the patience for these patterns of how long they take to really break. So you don't want to rush into these. You don't want to sneak into them. You don't want to buy 94.30 to anticipate the break. Just wait for that break above 95. So again, broadly for this week, coming into the week, very light on the active side of things. Again, the S&P is in this extremely tight range, 1% range, where it's very hard to be trying to buy the upper end of this range. The lower end of the range is 1% lower. It's almost insignificant of a range to really trade. So coming in very cautious, being very patient, waiting for some top ideas. Again, the Qs look very good. We want to see a push above Friday's high. We want to see a push above Friday's high in the S&P. But again, the measure move here is 1% higher. So being very selective. Again, just keeping a close eye on this RRR and this KNSA again. Did not work today, did not get in. So have those alerts, no orders set for it. Again, thank you guys for watching. You have any other charts you'd like to go over, shoot me a message and I'll go over it in the next chart talk. Thank you.
Thank you, B.
Anytime, buddy.